Okay, turning live.
Okay, you guys are live. Let's go.
Hi, good evening, everyone. Hi, how is everybody? Hope you had a nice day. Yes, you can hear me. If you can, just maybe, is there a chat box that you can see? Do you see a chat box on your platform, or is there a Q&A box? Just want to make sure that you guys can see me and hear me clearly. Welcome again, once again, to the CGS-CIMB and CSOP webinar. Today, we have very interesting topic. We are talking about the two up-and-coming trends, mega trends that we see in the market. And we have two amazing speakers that will share with us their insights and knowledge. So before we start, let me just run you through with some exciting news that we also have. You see on the slide right here, and also on my background, you see a Tesla car, right? So this is a Tesla Model 3. And all of you here and all kinds of CGS-CIMB actually would be able to win a Tesla Model 3 by the end of the year if you trade with us. And terms and conditions can be shared more. So the next slide, you will see that this QR code takes you to the Tesla-driven campaign. If you can just take your phone and snapshot the QR code, which will bring you to the website. Or if you choose to, you can just type in the URL at the bottom, the driven.cgscimb.com. That will bring you to the website of the Driven campaign, your chance to win a Tesla. So if you are a client of CGS-CIMB, you already enroll in the campaign. So all you have to do is just do your trade with us. And every month, we will have some lucky some prizes as well. And at the end of the year, come December end, we will have the grand prize of the Tesla Model 3. And if you are not yet a client of CGS-CIMB, go to this website, just register here on this page, and our colleague will contact you to open an account where you can trade with us to enter the draw for the Tesla Model 3. Right, so also very exciting news tonight is if you are attending the webinar, you can also win some prizes. If you're active in the webinar by posting questions, by participating, by clicking onto the platform, you will win points. And at the end of every month, so this month is coming to a close. So the first 100 person with the highest point will walk away with a $50 Takashima voucher. So this is a very easy way to win $50 Takashima voucher. I will just play a short video on how you can do that. This video will showcase how you can do it on your mobile, but it will be similar on how you can do that on your PC as well.
Want to win $50 Takashimaya vouchers when you learn from our free investing and trading webinars? You can simply register for our webinars, log into the Attendee Hub, go to Community and click Join Game. Stay engaged and see how you rank on the live leaderboard. Answer polls, ask questions, submit feedback, and more. Only 100 winners with the highest scores will win each month. What are you waiting for? Click Join Game now. Terms and conditions apply.
Right, so do participate actively. Every time you ask a question on the Q&A box, which you can see on your right-hand side on your platform, or you can also click on the chat box and just ask some question, talk to us. You will be winning points that allow you to participate in the Takashima draw. So very exciting. So just click there and participate. Tonight, we have with us two great speakers to share their insights into the two megatrends we have. So let me briefly introduce our speakers. We have, first of all, Adrian Chiu. Adrian is Vice President of Sales and Product Strategy at CSOP Asset Management, and he oversees the ETF solutions for brokers, wealth managers, and family offices in Singapore. And he's also part of a team responsible for developing sales and strategies and strategic partnership with institutions in Southeast Asia. Along with him, we have also on board with us Ms. Nikki Lim. Nikki Lim is a Senior VP of CGS-CIMB Securities Singapore. She has more than 10 years of experience in the financial market and specifically specializes in the Hong Kong China market. So we really look forward to hearing her views and sharing her opinions about what we're going to present later. Before we start the webinar proper, let's go through the standard disclaimer. So could just take a few seconds to read through the disclaimer. So basically tonight's presentation is for educational purposes only. We try our best to provide accurate data as much as we can, but please take whatever information you share as opinion. And if you were to make decision on a financial investment, please speak to a qualified financial professionals. All right, with that done, I'd just like to start with the two megatrends that we're going to touch on tonight. So specifically the megatrend of cloud computing, as well as renewable energy, specifically on solar energy. And these two megatrends has been growing in the last 5-10 years, especially in the last couple of years since COVID. The COVID situation has really catapulted this megatrend into the limelight, and things are going so fast. Like all of you know, most of us are working from home. We are going online a lot more, and all these are having an effect on these two megatrends, on cloud computing and solar energy. And so what specifically is cloud computing? So I'd like to invite Adrian to come on and just share with us a bit more about cloud computing in detail. So Adrian, would you please go ahead?
Thank you, Nixon. Thank you for the kind introduction. I want to thank all the audience that took time to be with us tonight, so that it gives us a very rare and precious opportunity to talk about the two mega trends, cloud computing and solar energy. And I would like to say thank you, CGS-CIMB for such a, taking the effort to actually organize this webinar. And having said that, cloud computing is actually among us, and it's actually very prominent. It's actually ever present in where we are. Nixon, can I have the next slide, please? Hello, Nixon. Oh, okay, got it. So cloud computing, this is basically, what is cloud computing? It's actually a service. Cloud computing is actually a service. It's a delivery of computing service, which includes servers, storage, database, network, software, analytics, and intelligence over the internet. Now, the cloud is actually called the internet, right? So what you do is actually by using the tapping onto the internet and power, right? It offers a lot of three benefits, right? It offers companies that adopt cloud computing faster innovations. They provide flexible resources to companies that have adopted cloud computing, and provides the economies of scale to these enterprises. Now, there are three key benefits in terms of why enterprises use cloud computing, right? Three: flexibility. One is time. Wherever you want, you can actually use it. Resources flexibility is however you want to use it. And also geographic flexibilities, wherever you want to use it. So for example, this Zoom right now, right, that we are hosting is actually is made possible via cloud computing. And without cloud computing, we are not able to, we will be actually hampering in terms of delivering our message to you by the COVID-19 right now. Because right now there's we couldn't have any big scale kind of face-to-face seminar or meetings right now. So Zoom, tapping on to cloud computing, overcome such obstacles and still make, enable us to continue to do business as usual, and also reach out to a larger audience by using Zoom itself. So what I just mentioned is actually, it provides a lot of flexibility in terms of time. I can actually meet you right now at 7 p.m. And wherever you are via Zoom. I don't have to fly down to see you, any clients overseas. Having said that, I transgress past geographic limitation. I can actually have Zoom right here in my office and actually meet anybody around the world globally. And in terms of flexibility, I don't have to have an IT support system right there to think of managing a Zoom like this. I just go to this Zoom website, set up a login, create a meeting, have a Zoom link, and I just forward to my audience, and my audience just click in and just sign in and have this Zoom meeting right now. So that is the power of cloud computing. Now, cloud computing is actually formed via three forms of businesses. One is infrastructure as a service. We call it IaaS. So some of the prominent names that we have is Amazon, Alibaba, Microsoft. These are the three big names that we do. Next is actually platform as a service. Now we have like Snowflakes, WeChat mini program. Even Facebook is actually tapping on cloud computing, and it's within the platform as a service. Now software as a service is actually closer to us. It's actually everywhere. It's on our mobile phone. Likewise, I did mention Zoom, Disney Plus, Netflix, YouTube, Spotify. These are some of the examples of new industries, software as a service, sprouting out on the strength and on the cloud computing industry. So if I were to take a step back and put in more layman terms, actually, if you want to sell a pizza, right? So traditional method is actually you have to find a kitchen, you need to find you need to buy ovens, you need to tap on the oven to the gas, you need to buy ingredients such as dough and topping. You need to hire a cook to make a pizza, right? Now, infrastructure as a service, if you put it in the kitchen kind of format, they will look after the kitchen, they will look after the oven and the gas already. The hardware is done by them. All you got to do is just bring in your dough and your topping and your cook, and they will just come in and then they will just make the pizza. Platform as a service, even provides the basic necessary ingredient of the pizza. All you gotta do is actually come in with different toppings, with different different toppings and different flavor that you want to sell as a pizza, right? And your cook comes and cook in. But the service as a software as a service is just like a I would say like you're going to a supermarket and you buy a frozen pizza. All you got to do is like they have actually cooked the pizza, they actually make the pizza, you just go to the supermarket and you just buy a frozen pizza, you just bring it back home and then you just put it in the microwave or you just toast it hot. So this is what I meant by, if I were to put an example to cloud computing into a three different form of cloud computing, this is what I meant by, infrastructure as a service, platform as a service, and software as a service. Next slide, please. Right. So not only that, cloud computing made it so much safer, cheaper, and more efficient for enterprises who adopt cloud computing. Now, the traditional way is actually, on premises. Companies have to, maintain servers. You need to employ, developers, and then we need to apply, fixes and patches, upgrade, downgrade, removing of software bugs, fixing of bugs, and you need to tune your performance and stuff like that. So this is actually very high cost to enterprises who wants to maintain their own servers within themselves, right? But with cloud computing, again, back to Zoom, you just only pay for the subscription. For example, if you want this Zoom meeting to be longer, you pay a fees for a longer duration. Else, there's nothing else for you to maintain. You just maintain the login, Zoom will look after the database, will record this webinar and provides, some form of, you could actually have a library of videos saved within Zoom and it just load up within the website. So there is, in terms of cost benefits, you just pay on demand. pay when you use it. It helps enterprises, reduce fixed capital expenditure, and yet, using that to redeploy into building up their business as well. Cloud computing makes it safer because you need to focus on the business itself. You don't have to worry about maintaining in terms of infrastructure. They provide, backup, business continuity, and disaster recovery is so much more easier in that sense. And having said that, cloud computing helps the whole range of businesses around the world, right? In terms of tech firm, it forms a breakthrough in terms of hardware bottlenecks. So you could see YouTube, Netflix are actually, tech companies that adopt cloud computing and make, a breakthrough in that sense, which I will share more later. And for non-tech firms, right, it helps to improve business efficiency. Right now, for example, like CSOP is a financial industry firm, right? A financial firm. Right now, due to I couldn't meet clients physically to talk about, their, investments, ideas, and investment teams. But using Zoom and using the cloud computing, actually, I'm using Zoom to reach out a wider audience as well. So this helps me to improve in terms of my business efficiency. So this is my case. Back to Nixon.
Right. Right. Thanks for sharing, Adrian. That's very enlightening. I can see that how cloud computing can actually save a lot of costs for a lot of application that we use on a day-to-day basis. Let's go to this slide. So why specifically cloud computing? I mean, there are many technologies out there, but why specifically cloud computing? Would you like to share?
Yes, please. Next slide. Yep. So yes, cloud computing around, if to talk about why, right, we need to go back to the past, who is the first mover in terms of this industry. And Amazon was the first mover in terms of adopting and producing cloud computing. And cloud computing has actually helped them to turn from loss to profit and is made possible by cloud computing. So Amazon is the pioneer of cloud computing business, and they have launched, the Amazon Web Services, or call it AWS for short. And gradually they've established a very comprehensive cloud computing services platform. And having said that, it has become the pillar of Amazon business right now. And just last year, at the peak of the pandemic in 2020, AWS contributed near to 12% of Amazon's revenue, up to 60% of their operating profit itself. So you could see right now, due to Amazon, it became a strong support in terms of the stock price. And you could see in 2017, after they provide, Amazon has provided over 100, cloud services and have a very huge penetration rate. For the last 3 years, it's actually helped, Amazon's stock price to rally, up to maybe 3,500%. And having said that, since 2013, the annualized stock price return was about 35%. And the operating profits was actually coming in about 54% annually per year in the same period as well. Next slide, please. Right. So, I mean, there is a lot of adoption for Amazon Web Services, right? What Disney Plus is something that we after end of a long day, we just want to lie in bed and catch up with our old movies in Disney Plus. Walt Disney has actually confirmed that AWS is their preferred cloud partner for their streaming services, right? Netflix took 7 years to actually migrate to AWS. Initially when they first started off, they were actually maintaining their own servers. It was very costly. There was a lot of downtime. There was a lot of glitches in terms of their application. So they have actually, they are actually one of the very successful cases to actually use cloud and run by Amazon. And it helps to provide so much more of like billions of hours of videos to the investors. And due to the cheap cost, the cost reduction in terms of capital expenditure, we as subscribers were able to only subscribe maybe $15 a month to have a whole library of videos to watch. Having said that, Airbnb was another example. They actually ride on AWS and cloud computing. Airbnb is actually a community marketplace that help to short stay vacation to matching short stay vacation goers with properties that's being rented out for short term. So again, you can see that this is also one successful case that Airbnb has actually switched to AWS, and hence, being riding on that, they are able to list on the US exchanges in a successful listing in that sense. Next slide, please. And you could see that ever since Disney has actually adopted AWS, just this last month alone, they saw a 39% increase in terms of download. They have 1.1 million in terms of new user, and this is also due to the Marvel series of Loki. And this is actually for 2-3 weeks straight, they have been getting new subscribers and stuff like that. Back to Netflix, they spent about $10 million each month just on AWS services for most of their cloud computing and server needs as well. The next slide, please. And then next, one of the tech companies that actually benefited from cloud computing is actually Microsoft. Now, the cloud computing business is actually the largest revenue for Microsoft right now, very similar to Amazon. Now, back in the 1990s, where during the PC era, Microsoft was actually having a market cap of $600 billion. They were the world #1 in that sense, but they actually gone through last 15 years in that sense. They tried to come in. They launched a Zuni, a multimedia software, already withdrawn from the market, and in 2009, the market cap fell below $150 billion. So there's a fall from grace, right? Having said that, they tried to launch the Windows Phone in 2010, and that kept falling. In 2017, after the first launch, they actually removed that phone from the market. They actually exited from the smartphone business in that sense. But come 2016, they actually jumped into the cloud computing industry, and that has actually helped Microsoft in terms of their operating profits and their books. And you could see their revenue growth by 24% at the peak of the pandemic last year in 2020. Operating profit has been up by 32%. 2018, the market cap actually recovered back to $800 billion. And I think just last month on Channel News Asia, they cited that Microsoft market cap right now is actually $2 trillion. It's as huge as the economy of South Korea as well. So this is actually how you see some tech companies actually benefited from cloud computing.
Right. That's very exciting, Adrian. I can see the pattern there, as in riding on a trend. We can see that the provider of cloud computing, like Amazon, like Microsoft, they are all riding on this trend, and they're expanding exponentially. The user of cloud computing also are able to tap into that technology and grow along with the mega trend. So this is very exciting. What you've shared so far, pretty much, I would say, a lot of US-based organization. Maybe you would like to share. We can go next into hearing a bit more about closer to home in Asia, specifically China, Hong Kong, the cloud computing industry space over there, and how is it performing, and more importantly, how as investor we can actually take a look into it. And this is where I'd like to invite Nikki. Nikki is the VP of CGS-CIMB Securities, and she has many years of experience in the China, Hong Kong space, and therefore I'd like to invite Nikki to go ahead and share with us your views on this mega trend, please. Nikki.
Okay, thank you, Nixon. All right, so as per what Adrian has introduced just now earlier, cloud computing is a system that primarily comprises of 3 services: the SaaS, software as a service, infrastructure as a service, IaaS, and also the platform as a service, PaaS. So I will zoom into the China cloud computing industry, which is actually still gradually developing, especially on the SaaS segment. So as projected by IDC, the cloud computing penetration among the enterprises will increase to 15.8% by 2024 in China. And the market size will reach renminbi around 563.3 billion. So currently, China's cloud market is still at a very early stage of development as compared to its US counterparts. So as the statistics provided by R&D World, China's spending on their research and development is expected to top around 621.5 billion in 2021, which denotes a 25.5% share of the global R&D spending that year. But in contrast, China's spending on the cloud computing only accounts for 6.2% of the global figure. So you can see that there's actually a huge potential to growth as for the government to invest more into cloud computing. But for the US side, 11 out of 20 prominent tech companies have actually been intensively engaged in the SaaS business segment, which already accounts for 40% of the value of these 20 tech companies. For China's side, only 6 out of 20 major tech players are invested in SaaS business, so occupying slightly 3% of the total value of those 20 largest China tech companies. So right now, I'm going to zoom into the individual stock plays that are mainly focused in cloud computing. They are listed on the Hong Kong Exchange. We have Kingdee, stock code 268. In Chinese, it's called 金蝶卵剑. So this Kingdee holds 6.8% of the China cloud market share. So they are very famous for their enterprise resource planning, in short ERP, and is a type of SaaS cloud computing. So this strength enables the company to convert many of their existing clients to invest into other segments of their services. So we also have witnessed last year when the COVID outbreak, it actually enables the China government and to use cloud computing to assist the people to merge into work from home basis in a better manner. So there's also Kingsoft Cloud. This is listed on the Shanghai Exchange, but Kingsoft, the parent company, is a 3888.HK, is listed on the Hong Kong Exchange. So this Kingsoft Cloud is the largest independent cloud service provider in China. And Kingsoft Cloud is actually a spin-off from Kingsoft, the parent company, and it was formerly guided by Adrian, which is the founder also of Xiaomi. Adrian also has spun off several businesses under the Kingsoft umbrella, such as the Kingsoft Office. So recently, Kingsoft Cloud has shifted their focus to the financial and government fields, enabling it to open up a more new business segment beyond the public cloud businesses. Then third Hong Kong play, we will be looking at Weimob 2013. It is a cloud-based commerce and marketing solutions company, which leverages on Tencent's social networking service platform for the SMB in China. So this company provides SaaS and other software for e-commerce, retail, catering, hotel, and also enables merchants to carry out traffic management, obtain public domain traffic, and also supports them to achieve digital transformation. So now we zoom into the IaaS segment. Well, the most dominant China play, it will be Alibaba Cloud. And it's also the world's third biggest IaaS cloud service provider, and it's the biggest in Asia for the third year in a row, based on statistics provided by Gartner. So for this first quarter last year, 2020, Alibaba Cloud was the only major cloud company to increase its market share from 5% to 6%, whereas the US plays such as Microsoft, they dropped from 18% to 17%. So within the China domestic market for cloud computing, Alibaba Cloud holds 39.8% of the market share. Followed up by, we have Huawei Cloud, is 19.7%. Third will be Tencent's Cloud, 13.7%. And Baidu, their AI cloud is 7.2% market share. So out of these four main China players within the China cloud computing segment, Huawei Cloud made the most gain during the quarter. It grew about 116% to take a 20% market share, and all thanks to their internet customers and government projects, as well as their key wins in the automotive sector. So right now, they are building the largest data center facility in Gui'an to provide services in Southwest China. And Tencent right now is about 14% market share approximately. They expanded their services into healthcare, retail, education, and transportation, and also increased their focus on enterprise opportunities, by establishing a SaaS ecosystem program and launched this new app called the Enterprise App Connector to simplify the management of multiple SaaS products. So the last will be Baidu. They already had an ongoing success with large financial service customers. So they also grew in the government part, in the internet, transportation, and healthcare sectors. But despite the aggressiveness of the China companies that are growing their ambitions into the cloud computing, it's still a far cry away from how they challenge the US dominant players, such as AWS, Microsoft, Google Cloud Platform, that actually really dominates the global public cloud market platform. So based on Q4 2020 last year, AWS has actually 32% of the world's cloud market share. Microsoft has 20%, whereas Google Cloud has only 9%. And we compare to the China players, Alibaba, he takes up about 6%, and Tencent is only 2%. Well, probably due to their low penetration rate in the Western market, and also mainly because they are so focused in growing within China itself. And we're also not forgetting about the lack of trust is indeed a very huge barrier when it comes to persuading customers in the US and Europe to sign up to a Chinese cloud provider. And also mainly due to the influence of the wider political situations between the East and the West. So the China players are right now also looking at emerging markets as their key factors to expand their dominance. So just last year only, the Chinese President Xi Jinping has announced that Beijing will be spending 1.4 trillion on digital projects, a whole string of digital projects over the next 5 years, including cloud investments. So based on the statistics given, for this year alone, Q1, their cloud infrastructure spending in mainland China grew 55% to US 6 billion, which was mainly driven by economic growth and focus on digital transformation. Well, such growth rate in China actually continues to outpace the rest of the world. And right now, we are already 1 year onwards from the start of the COVID-19 since last year around January, February. So the cloud service providers in China have actually enabled the acceleration of the government and other organizations' digital agenda, while they compress multiple years of transformation plans into much shorter time frame. So they are able to build critical relationships with customers early in the pandemic last year to support rapid digital transformation. And I think will be very crucial for how China's GDP is going to recover for second half of this year. And this year is still projected to be an important growth year for cloud services in China due to their continued expansions in online services, digitalization of processes and operations, and also investments across industries, enterprises, and government sectors. So beyond the domestic market, I believe that the China cloud players will still accelerate digital transformation in other parts of the Asia-Pac region, Europe, Middle East, and Africa. But definitely there will be challenges because there will be differences in their sovereignty laws, especially on the data front, the local data front, and also different countries, they have different highly customized industry-specific needs. So it's still a few, as in the cloud computing is still a segment of huge growth, especially for the China place to take note of. So for this CSOP, right now we come to this CSOP that actually have an ETF that tracks the global cloud computing index. So it's not just a pure Hong Kong China play, but it also involves the US plays too. So the stock code that listed on the Hong Kong exchange for this cloud computing ETF is 3194. I believe later Adrian will brief you guys more about it. So this is managed by the CSOP Asset Management. And I'll hand over the time over to Dixon. Yeah.
Yes, right. Thank you, Nikki, for the great insight. I know there's a lot of information, and I'm looking also at the chat. There's a lot of people asking whether there are slides or not. So fret not, this webinar will be recorded. So after tonight, you can actually log back into the platform and view the recording on demand. So that's one way. Towards the end of the presentation, I'll be sharing also Nikki's contact. So if you need to, you can always contact Nikki on that. So, so far now I know there's a lot of information, but very, very, very valuable information. And this is definitely very exciting because China is where the opportunity of growth will be. It's still lagging behind the West. So that means that there is actually a lot of opportunity. So let's get back into the presentation. I'd like to invite Adrian to come back to share with us a bit more about the innovation.
Yes, I would like to thank Nikki for sounding out my ETF, and every ETF have to track the performance of an index. And having said that, right now, cloud has actually provided a structural change in terms of how we deal in terms of the technology industry, right? And that has actually caused a very huge benefits to the supply side, right? And help to increase business profitability. And that's the reason why we can enjoy the future growth potential of cloud computing. And having said that, most of the enterprises around the world globally right now, only 4% are being plowed into cloud computing. Most of these enterprises are still adopting the old method where they are actually maintaining their own servers, hiring, employing developers, and doing all the stuff that I did mention earlier, which is very high cost to these enterprises. So that's where, as the beauty and the benefits of cost reduction, yet provide safer and faster innovation to these enterprises, we believe there's a growth potential in terms of cloud computing industry. More and more enterprises will switch from the old traditional maintaining of server themselves to adopting to cloud computing. And our ETF that tracks the index is actually a so active global cloud computing index, right? And having said that, this index is actually having a return since 2018 to now, comes in at about 227%. That's actually even higher than the NASDAQ composite, which actually came in for a 3-year period, comes in about 160%, and definitely outperformed the broad-based indices such as the S&P 500 and the Hang Seng Index itself. So you could see right now, cloud computing technology is actually providing outperformance versus the old economy. Next slide, please. Yep. So on the macro side, right, it's providing a very huge growth engine. We could see there's an unstoppable trend in terms of global digitalization right now, right? We believe that the IT expenditure of these enterprises will grow, even despite slowdown between these enterprises caused by the COVID-19, right? We believe that this year alone, that it's forecast that enterprises will spend up to 6.2% year on year into IT expenditure. And according to the Harvard Review, definitely like what Nikki has mentioned, US definitely leads in terms of converting, going online, going digital. And in terms of comprehensive power, they are leading in that sense. And just to echo what Nikki said and what Nixon has mentioned, China is definitely growing at a faster pace as well. In terms of expansion, in terms of the global public cloud market, you could see that in the 3 different forms, it has been actually growing a lot. We estimated that it comes up to about $3.5 trillion in terms of market share. And then we say that expenditure forecasted into 2022, we are looking at annual growth about average of 5 to 4% in terms of IT expenditure. Next slide, please.
Right. So that's very interesting sharing about all the trends that is happening in this space. Are there specifically any indexes or ways that track this performance of cloud computing globally? I'm asking because as an investor, we're always interested in how we can participate in this trend. And an index is the most direct way of going into that space to participate in the trend. So maybe Adrian, you can share a bit more about any indices that actually track this cloud computing globally.
Thank you, Nixon. Yes, as I did mention in the previous slide, we do have an index. That is the So Active Global Cloud Computing Index. So just a bit more of information of this index is that, it's actually launched this year. Like I did mention, he has about $3.3 trillion in terms of market cap. In terms of what's within the index is companies listed in both in Hong Kong and US exchanges. In terms of breakdown, 80% is actually US listing. I give you exposure to US established cloud computing giants already. And not that 20% are going into Hong Kong listing, and Hong Kong cloud computing companies will provide a bit of potential growth to the index as well in terms of performance. Now, there is a certain requirement as well in terms of liquidity. It needs to be actively traded so that these stocks are actually very popular stocks as well, underlying stocks as well. Number of maximum constituents, 50 in terms of rank, in terms of market cap, and the maximum weightings actually per stock is actually 5%. So this provides investors not to be overweight in terms of the giants and neglect the smaller companies that provides potential upside. And having said that, the smallest range is actually 0.5. The index will be rebalancing, will rebalance every quarterly on the last business day in terms of February, May, August, and November. So you could see in terms of the companies, out of 50 names, 32 is actually from US, and 12 names are from China itself, and the rest, smaller ones, are spread out globally. Next slide, please. So again, this index provides investors, the US, which are the global leaders with the largest market share. It also provides potential upside from China, which are the latecomers with the highest growth rate as well. You can see that in terms of the software as a service, the penetration rate is actually rising in US. You can see like very prominent is more and more apps coming, Netflix, Zoom, and Disney Plus. These are some of the examples. So in terms of infrastructure and platform and software, US companies still covers about 70% of the global market shares. And just to echo Nikki again, Amazon, Microsoft, Google are the major players in that sense. For the China side, latecomers, we believe they are lagging behind just only by 5 years, and it's very easy for them to catch up. The largest is still infrastructure as a service. They are still in the infrastructure business more. And we could see that the public cloud is actually growing very, very high, up to about 50% in terms of growth rate, right? They are actually going up at 50% growth rate already. So next slide, please. Right, so like just to echo again, Nikki, right? The three dominant players for infrastructure as service is the 3 A's. Now, Alibaba, Amazon, and Microsoft Azure. Now, this index provides beauty in a sense that, not only you have the exponent, what it does is actually, just to echo the benefits is that Alibaba has a wider range in terms of customer, right? Amazon and Microsoft, cover mostly in UK and US. But for Alibaba, they have clients within China and Hong Kong, taking up from 14% to 6% respectively in terms of the cloud computing business. Now, for the software as a service, now globally is actually there is no big major winners. So that's why the index provide investors, exposure to the more established software as a service kind of companies. So some like Salesforce, Workday, which is actually a human resource app or human resource cloud computing services. That's actually one of the prominent customers, actually Citibank. Shopify, Canadian company that actually provide e-commerce. Palantir is something that's actually very famous. It's a very powerful company. It's actually if you have a name and a license plate of a individual, you just key into this platform, you're able to find the dentist record, the health record, spending record of this certain person. So the Palantir's clients are actually probably be the US governments or governments itself, going for very high classified information in terms of surveillance. And usually, these companies, governments usually issue very lucrative contracts to such niche market, and I think Palantir will definitely have an upper hand in that sense.
Right.
Yep.
Thanks, Adrian, for your sharing. So it's pretty interesting, especially the part about Alibaba Cloud having both US, UK customer as well as their own China and Hong Kong customers. So it actually gives them a lot more diversity than AWS or Amazon. That's
Yep.
pretty interesting. And by the way, earlier, Nikki mentioned that CSOP has a cloud computing ETF. So just like to mention that again for those who missed that. It's basically called the CSOP Global Cloud Computing ETF. The ticker code is 3194 Hong Kong, and it's traded in 100 units lot size. So if for those who are interested, you can explore that. It's a Hong Kong listed ETF. Next, I would like to just let me see the recent headlines. Yeah, this is a slide we picked up earlier, Adrian. There's a recent headline about renewable energy. You know, it's probably quite linked to cloud computing as well, because we see that one of the concern about cloud is about energy usage.
That's
and
right,
especially now with all the emphasis on ESG and being green, we're talking about renewable energy. So the next topic naturally that links to cloud computing is actually renewable energy. And we see in the headlines nowadays that a lot of companies, Singapore is one example, because Singapore also has a huge data center industry. And when we talk about cloud computing, we talk about data center and energy usage. So we would like to see how the next connection would be renewable energy, and how that that space itself, that sector itself, is riding on the same trend of its own, as well as linked to this cloud computing trend. And this is where I like Adrian to share with us a bit more about renewable energy, and specifically solar energy. Adrian.
Yes, Nixon, thank you so much. So like you did already set the stage right. Data centers requires a lot of energy to keep the servers cool. And Amazon understands that they are actually very committed to keeping their energy source as green as possible. And they has been going out, entering contracts with major solar energy players within US to secure very cheap renewable energies to run their data centers, and also to run their cloud computing business. And we believe that photovoltaic, and what's photovoltaic? Photovoltaic essentially means electric generation from the energy of the sun. And having said that, just one fun fact is that by just if you're able to harness 100% of the sunlight energy that converts into electricity just for one day, the energy itself is equivalent to our annual energy needs burning from fossil fuel. So can you imagine just one day we're able to address the energy needs derived from fossil fuel? 2 minutes of energy from the sun, we're able to charge all the EV cars, the handphones, the laptops that we have, and mobile phones that we have. Just if you're able to convert 100% of sunlight into electrical energy source. So it's a very wonderful thing. It's a cheaper source of electrical energy going forward, because the sun has always given sunlight for free, right, unrelentlessly. So photovoltaic is just a process, in terms of converting sunlight into electricity. It's going to be a cheaper source of electrical power. And just to give us a understanding is that, what are the essential components in terms of the industry change required to make a solar panel, right? 2 important ingredients. One, the older ingredient is actually the polycrystalline silicon nugget, right? That is actually the older material that actually helps to necessary component to make solar panels. Now there's a new player in town that's called the monocrystalline, right? That is actually helping there's more supply right now in terms of raw material that bring the cost down to make solar panel. And having said that, he has actually the latest monocrystalline silicon has actually become more mainstream. There's actually this new basic material is actually helping to improve the conversion efficiency, right? And also the cost of this basic material is coming down we are expecting, the panels, the cost of panels and the cost of electrical generation via solar panel will come down. Not only that, innovation. China has been innovating in terms of making better panels, in terms of the wafers. They're actually making it bigger and thinner, and that's actually helped them to reduce the cost as well. So this is very important. The midstream is very important. That's where, it's helping them to actually produce better cell to improve their conversion efficiency. What do I mean by that? So for example, if you are getting 1,000 watts per square meter in terms of sunlight, solar radiation, right? And the final output is only 20%, 20 watts of electrical energy. So the conversion efficiency is 20%, right? Back then, in the earlier days, right, the conversion efficiency was just only 1%. But right now we're able to, with the innovation, with the better, findings in terms of the basic material, right now the conversion efficiency is actually exceeded 20% already. And having said that, we forecast that every percent increase in terms of this conversion of electrical power, sunlight power, right, will bring down 5 to 6% in terms of the cost of electricity per kilowatt produced by solar panels. The next slide, please. So it's going to be a cheaper source of electrical power. And that is happening. It's actually causing a 1 yuan 1 kilowatt dream is coming true right now. And the photovoltaics, or PV for short, going forward, can be deployed almost where you could put it in the rooftop of your property, in our HDB flats. Lee Hsien Loong has just recently inaugurated and opened our first floating solar panel on the Bedok Reservoir, right? And it definitely has a better future than hydropower and wind power. Why do I say that? In terms of hydropower, right now, 2-3 days ago, Henan, unfortunately, they have a dam, and due to they call it one in a millennial kind of rainfall, risks the potential of dam, overflowing and collapse as well, and cause more harm than good in terms of the mankind. Wind power, it's depend on the wind as well. It's very intermittent, but sunlight is more consistent in that sense. So we believe that in terms of the renewable energy, photovoltaic is actually standing at upper ground in terms of hydropower and wind power itself. And the technology is becoming more mature. The cost of producing the panel, the cost of generating electricity via solar energy is getting lower, is plunged already. It's actually within the range in terms of fossil fuel. So it's actually going to increase. With the cost going down, it's definitely going to increase in terms of popularity. Next is actually, international governments and China themselves are looking to coming out with new plans to be carbon neutral by a certain timeline. And for China, by 2060, they want to be carbon neutral for the country. And by then, they have actually a goal by 2030. They want their wind and solar capacity installed in the country, generating about 1.2 billion kilowatts of electricity via solar energy and wind itself. Next slide, please. So we do have an index, tracking the whole PV industry, right? We call it the CSI Photovoltaic Industry Index. And in looking at the chart on the bottom top right, the CSI Photovoltaic Industry Index has actually outperformed the traditional CSI 300, but more than double already. And in terms of weighting, be it in different parts of the industry, whether it be a cell module, which is the midstream, or like crystal silicon, which is the upper stream, wafer in terms of power station, which is the end stream. This is actually, we have a good mix in terms of the different upstream, downstream, and midstream kind of industry. One good thing is actually, among the top 4 photovoltaic companies, right? Most of them has Longqi, JA Solar, and China Solar has actually returned to the A-shares. That means they have to do a listing into the China Stock Exchange. Now, Jinko Solar Energy is expecting to be listed on the A-share as well. So right now, currently it's actually listed on the US exchange. It's actually submitted paperwork to be listed on the A-share market as well. So having said that, with the successful listing, right, these 4 companies has the potential to be included into this index as well, providing investors, a one-stop solution, one-stop investment into the whole PV industry chain. So just a bit of update, just a bit of the index information is that the maximum stock is actually 50 companies relevant to the PV industry. A maximum weightage per company in the index is actually up to 10%. It's actually rebalanced semi-annually on the second Friday of June and December as well. Back to you, Nixon.
Right. Thanks, Adrian, for sharing. That's pretty interesting. Would you be able to share if there are any industry leaders in this space?
There are definitely there. So the next slide, please. Yes, so China is definitely the largest and the top adopter of photovoltaics. So in terms of every part of the photovoltaic chain, right? China is actually ranking the first in the world. There, right? In terms of the raw material output, they have been the #1 raw material output producer for the last 10 years, achieving 392 tons just last year alone. And having said that, in terms of the module output, right, they have been reaching about 124 gigawatts just last year alone. They have been #1 for the last 14 years. In terms of installed capacity, has been a world #1 in terms of 6 years. Much faster and compared to the earlier adoption of the Nordic countries. Right now the cumulative installed capacity is actually up to 250 gigawatts in just last year alone. In terms of how fast they are installing this, right, the capacity growth. Right now, they are actually the highest growth rate for the last 8 years, right? In 2020 last year, the new installed capacity have a year-on-year growth of 60%. And electricity generation via PV, right, has been continuing increasing. We reached 260 billion kilowatts just last year, and that has been a year-on-year growth for about 16% or 17% for China alone. So they are #1. They are the industry leaders in terms of this industry. The next slide, please. And on the supply side, who is supplying, both the basic material, the midstream material, and the end product itself. A-shares companies dominate the whole industry chain, right? If you look at, in terms of the raw material, polysilicon, right? The one in the dark green are all A-shares companies. The one in the stars are constituents within the index. If you look at in terms of the wafer side, again, A-shares companies stood 98% in that industry, in that small little industry. Cell production, again, A-shares companies. In terms of inverter, most are also A-shares companies. To summarize, A-shares dominate both from the upstream, midstream, and downstream supply chain itself. The next slide, please. Right, and we believe that they will continue to be a photovoltaic leader in a sense due to the continuous profit growth. Let me say that after years of decline in terms of subsidies and stuff like that, we are looking at the earning performance of these sectors has been very stable for the last 3 years. We see a huge growth in just last year alone, with further policies support, further reduction in terms of the cost to generate electricity. The profitability of these A-shares photovoltaic companies would definitely improve, and their growth definitely be sustainable for the long run. So you could see that in 2018 definitely net growth was actually negative, but right now due to the policies by the Chinese government, the direction of the Chinese government going forward, they are showing promising signs that in terms of revenue and net income is actually increasing. In terms of net income growth is actually growing very well as well. So we expect it to increase further. We believe that expect revenue for this year is coming at about 33%, 35% of net income growth. Right, we believe that will as the cost reductions come down further, the expected net income growth for 2022, 2023 definitely stands to be more robust and more rosy going forward. right? So just, some of the companies, largest companies. So LONGQI is actually the largest supplier for the latest monocrystalline silicon, right? They actually pledge to put 5 to 7% into the R&D. So this is actually to help them to actually improve the conversion efficiency from sunlight to electricity. They already have in their books, they already have about 860 patents obtained in the whole industry. So the industry innovation is definitely going to be the next tailwind to provide explosive growth in terms of production capacity, right? So we believe that, in terms of overseas component sales for LONGQI has accounted for about 50% just last year alone. Domestically, for shipment and demand for, the product for solar panels actually increased by 350%. So it's actually really good. So you can see that in terms of explosion capacity has actually gone up itself. The next slide, please. Tongwei is actually another leader. It's actually in 2020 last year. They actually put, the highest purity in terms of polysilicon, reached 19,000 watt. Forecast to achieve more than double, 155 tons just this year alone, and more than double again in 2023. So they have been already making money. They have installed about 44 power stations already, with the installed of about 2,100 million watts of electricity already, and that has been giving them a gross profit of about 50% in that sense, and actually brought huge economic benefits to the company. The next slide, please.
Right. Thanks, Adrian. It's pretty interesting. This is quite a different scenario from the cloud computing, because in cloud computing, we see that a lot of the major players and leaders were from the West. But in the photovoltaic space, we actually see a lot of the bigger player and leading player coming from China itself. So this is pretty interesting. And for those who are keen in the index that Adrian mentioned, the CSI Photovoltaic Industry Index, CSOP actually has an ETF that actually tracks that. It's called the CSOP Photovoltaics Index ETF. Ticker code is 3134. It's listed in Hong Kong if you're interested. Next, I will just go to the takeaway for the day. It's pretty interesting. Let me just do a quick summary. So we can see that we talk on two major trends: cloud computing as well as solar energy, basically renewable energy. And it's a growing segment in the tech sector, and future cloud computing seems to be quite vast, and we basically don't see the limit to it as of now. So I think there's a big opportunity and a lot of growth area there. And they also gain diversification in the US cloud giant, raising China cloud companies. So basically what Adrian has shared is cloud computing is going through being adopted by different industry, different sector, different geolocation, as well as because of cloud computing is also leading the space of renewable energy, which is basically the segment on the right. We are talking about carbon neutrality, safe, cheap renewable energy, and that ultimately, of course, we will also focus on solar energy and photovoltaic. In the interest of time, I'd like to go next to the Q&A section. We'd like to take some Q&A from the floor. There's actually quite a few questions that I am seeing right now, so I'll just go through a list and post some of the questions to Adrian.
Yep.
Okay.
Yes.
Okay. There's a question about the CAGR, the CAR for the cloud computing. Any stocks in Singapore involved in this area? So I'm not sure whether Adrian can share if there's any specific stocks in Singapore. I believe the question is asking about SGX listed product that is involved in cloud computing.
Okay, so I think there's two parts of question number one. What is the CAGR for cloud computing? We are expecting, it's close to about 17.5% for cloud computing industry. Pardon me for the lack of better knowledge. Do I know any stocks that are involved in that area? To my best of my knowledge, I don't think there's any SG stocks that's actually relevant in that sense. Maybe Nikki could help me in that point. Second question is actually, yeah. So this is my answer to question number one.
Okay. The next question, do you see China overtaking US for cloud computing, and probably by when?
Ooh. That's a tough one. Based on the rate of growth, they may take some time to be on par, but to overtake is really depending on the SaaS industry, right? If if there's a lot more SaaS coming up, we could see that there's more cloud computing needs itself. To put it to place a bet on it, I think yes, they will definitely take over US. For example, they will likely take over US in terms of cloud computing based on one reason is that in the 14th five-year plan of the Chinese government, they want to adopt a dual circulation theory where they want to boost domestic consumption with using the homegrown technology companies. You could see more and more SaaS kind of apps coming out within China. It's gonna, and with the population that big, huge in China, I think it's a matter of time that China will overtake US in terms of cloud computing.
Right. Thanks, Adrian. Yep. Okay, just to keep track of time, we probably have about 5 more minutes maximum for question. So we have one question here. Should we invest in data center that is an infrastructure to cloud computing or cyber security? So I guess there's 2 questions here. Maybe I rephrase that. So we talk about cloud computing. We all know that data center is the lifeblood of cloud computing. So do you see that we should invest directly into data center or versus investing in the cloud computing space?
It's really depending. So if you want to do investment into data centers, right? You definitely invest into what I'm thinking is actually just not take it as an investment advice, but it's my thought process. Most of these, for example, Amazon Web Services, they already own data centers, and they are going, for example, like IBM is actually going into India and setting up data centers itself already. So by buying into data centers itself, it could be a double exposure in that sense. What I could think is actually if you were to buy established data centers already, so that's where they could actually outsource or offer their services to Amazon themselves, for fees. But if you are new to investing, you want to buy into cloud computing, I believe there is a certain portion of the investment will actually be exposed to data centers as well. And then the second part is yes.
Yeah, I think that's a good insight. So basically, a lot of the cloud computing players own their own data center. So when you invest in the cloud computing players, you are actually investing indirectly in the data center.
Yep.
Yep.
That's right.
Okay, there's another question. How secure is cloud storage for financial players or customers who require highly confidential data? So I think this question is talking about the security of cloud storage and cloud computing per se.
Yes,
yeah.
I would say that is one of the potential risks in terms of cloud computing and some of the services risks to the sectors as well. As we go online, as we adopt digital, we could see, cybersecurity could be the next investment team as well going forward for these tech industries. So I would say that the risk is there, but I think they are these cloud computing companies are not sitting there waiting to be attacked by cybersecurity. They are also improving their software in terms of protection, I would say, in that sense. So I mean, we cannot. I mean, we have to be upfront and we have to acknowledge this. So every investment comes with risk, And for cloud computing, definitely there's a risk of cyber attack. And that could be a next potential investment advice, the idea as well going forward.
Right. We have a next question. I think might or might not be related to what we just discussed. What would disrupt cloud computing? What is the risk should we know before investing in cloud computing?
Well, what's next besides cloud computing? Well,
yeah, what is the risk? So we know that the
Yes.
cloud computing is a growing space. It's a
Yeah.
very attractive space. Is it vulnerable to any disruption in technology?
Yes,
Because
I
it
think-
itself
yeah.
is a disruptor, but could it also be disrupted?
Well, what's the next frontier? I wouldn't know. But I mean, to answer the second part of the question, risk in terms of, like I did mention, cyber securities, cyber attack is actually one. Power failure, outages actually is one, but actually bring down services. There's actually an incident where it's called Fastly, was actually providing website web services for US government. And I think the website went down due to some outage. So that's actually some of the risks, but fundamentally that doesn't really, that might be a proof of small hiccup, but fundamentally doesn't really affect the mega trend going forward.
Yes, yeah. Okay, I think that's a very good wrap up to today's session. I think in the interest of time, let me just share the next slide. Just a reminder, okay, this is about our Tesla-driven campaign. So for those of you who are our client, remember, the more you trade, the more opportunity you have to win for yourself a Tesla as a grand prize. And besides that, we have our monthly draw as well. So the more you trade, you'll be also partaking in our monthly contest as well. And I'd like to share the contact information for Nikki. I understand some of you were asking for Nikki's slides. So this webinar will be recorded and it will be posted on the same platform that you log in under on demand. So you can view the webinar again any point, any time at your convenience. And if you need to contact Nikki directly, here is her contact information, and as well as Adrian, if you need to contact Adrian on any CSOP ETF related matter. For account opening and general query, you can email to the email address shown here at CGS-CIMB.com. So let me wrap up this the last reminder of the campaign. So we have this Driven to Learn campaign, which all you are partaking right now. This is one of a series of many webinars to come. So please look out for more webinars to come and register yourself for the webinar. And follow us on Twitter, Facebook, and Instagram. So these are the QR codes. So I just leave here for a couple of seconds for you to scan. And without further ado, I'd again like to say thank you to all of you for participating in tonight's webinar. Thank you to Nikki and Adrian for your very insightful sharing. I wish all of you a good evening, and the weekend is coming soon. After tomorrow will be Friday. So I wish you all an early good weekend. Thank you, everyone. Good night.
Thank you, Nixon. Thank you, Nikki.
Thank you,
Thank you, everyone. Thank you. Stay safe.
Stay safe. Bye-bye.